Carvana posting a top and bottom line beat for the fourth quarter, noting the company expects a strong 2025 in its release. But that said, shares are falling sharply. They're down on more than 13% right now. Carvana CEO and co-founder Ernie Garcia joins us first on CNBC to break down the numbers. Ernie, it's good to have you. Mention the decline in the stock price. Of course, it only gets it back to where it was trading at the end of last month. So clearly there'd been a bit of a run up into these numbers. But the magnitude of a cash flow beat was maybe not what people thought. Tell us what drove the quarter.
Sure. Well, I mean, first of all, I think it was an incredible quarter, more importantly, an incredible year. I think if we step all the way back, we just had the most profitable year that any automotive retailer's ever had in history, as far as we're aware, as measured by EBITDA margin. That's pretty incredible. We grew at 50% in the fourth quarter. We grew at 33% for the full year. And we did all that with a 1% market share, which I think suggests a pretty incredible opportunity in front of us. And I think that's only possible if you've built a model that customers love and you got a team that are fighting hard all the time. So we're very proud of it, and we think there's a lot more good stuff to come.
Yeah, certainly, the market share story remains a kind of a long-term tailwind, I assume. That said, what's happening right now in the market when it comes to used car pricing, sort of affordability, customers' credit experience, things like that? Are they all supportive, or are there some challenges there?
You know what, to be honest, I think things are fairly stable. I think, we're coming off a 4-year period where there's been a ton of movement in affordability and credit and all kinds of things in both directions. I think for the most part, things are reasonably stable, which we think is a great environment. Our job is to keep delivering great customer experiences, keep making the business better every day. And I think, the movement that you see in our numbers is so large compared to anything macro anyway that we feel like the ball's in our hands and we just got to keep marching.
Seeing some of the analyst reaction noting the big growth in inventory outpacing the growth in sales over the course of the year. What's behind that, and is that something that's going to need to be worked off?
No, I think that's something that we've been working really hard to build up. Building an inventory like that's complicated when you got a big operationally intensive business. We've got a lot of people in the company that got to find the right cars for our customers, figure out which the cars are that the customers want, figure out the right price to pay for them, buy them, transport them, put about $1,000 of parts and labor into every single car, get them up on our site to give our customers tens of thousands of options for them to choose from. And we think that's a huge part of our value proposition, is just having a very large selection for our customers. So we've been working hard to build that inventory up. We hope to build it further from here. And we think that's great for our customers and great for our business.
Ernie, to the degree you're seeing evolution in the consumer's preference on price, on model type, I mean, where would you say the biggest delta is right now?
I think that there's maybe nothing crazy notable. I mean, I think, there's clearly been a lot of movement in EVs. I think, EVs were a huge focal point for the entire market for several years. I think, more recently, they've been viewed as something that, maybe is facing a little bit of a headwind. I think for us, for the full year, we had 5.7% of our sales were EVs. That's around 4 times what is seen in the broader used market. And I think, that's an interesting change. I think, we're believers that EV technology is here to stay, and every technology that makes progress goes through fits and starts. But we think that consumers will continue to demand those cars. We think we're in a great position to serve those customers' needs, because we do have customers that disproportionately like those cars. And then also, an interesting dynamic of the used car market is that the product clears once before we get it. So, the product has already found its price in the market before we go sell it to customers. And so those are very profitable for us. So that's interesting, and that's an ongoing evolution. But otherwise, I would say, customers want a great experience. They want simplicity. They want selection, and they want a fair price. And it's our job to deliver that.
That's interesting. That's a great answer. And it does sort of point to other research that has been making the adoption curve long-term a little more shallow, maybe some policy uncertainty, consumer hesitation. From Carvana's perspective, are you happy to be agnostic, or do you want to sort of lean on various trends given the power that you do have?
Yeah, I mean, I think we want to pay attention for sure, and I think that we want to, here and there, we want to take positions. But generally speaking, our job is to build a business that acquires cars from whoever their previous owner or user was and gets them ready for the next owner as quickly and as efficiently as we possibly can. That's required, rethinking the entire business, making the transaction flow self-service and very simple for our customers so they can go through it. And then we want to listen to what our customers want. And so, our supply chain is really more of a pull system. We listen to the demand signals from our customers. We go out and acquire those cars, and that's the way we run the business.
Just talk a little bit about the financing side. I mean, you say you want to get to investment grade. The company has issued some equity. You obviously have to kind of, you sell your receivables into the market, things like that. What's the environment like, and where are you on your path to where you want to be?
I think the environment for us, selling the receivables that we originate has been great and getting better, and so I think that's great and that's exciting. I think as we get bigger and more well known, I think that we've continued to make progress there, and so that's great. I think from the company's finance profile perspective, I think the evolution has been unbelievably rapid, and we're extremely proud of it. The way that we think about that internally is, what is our net debt to EBITDA? We had $1.7 billion of cash sitting on the balance sheet. That's a big number relative to our debt. And then I think super importantly, we've been growing EBITDA extremely quickly. We grew EBITDA about 4 times last year. We got to about $1.4 billion. We had just shy of $1 billion of operating income. The finance profile of the company is very rapidly improving, and that's exciting. And it means that we get to focus on building the business, taking advantage of this huge opportunity over a many-year period, and that's kind of taken care of on the side. So I think that's all a great story, and our job is to keep executing.
Ernie, I know Kramer sends his regrets, wishes he could have been here for this one, but
he's been good to us. Tell him thank you.
Make it work next time. Ernie Garcia joining us from Carvana. Thank you very much.